Coinbase analysts now expect a possible Bitcoin recovery in December after weeks of selling pressure and investor fatigue. They argue that the correction in November may have cleared out speculative excess and strengthened the foundation for a healthier market. Their view is cautious, but optimistic, and supported by several key indicators. Open interest in perpetual futures for Bitcoin, Ethereum, and Solana fell by 16% compared to October. That drop shows traders unwound risky positions and reduced leverage across major assets. Funding rates for Bitcoin futures also moved well below the 90-day average. Coinbase frames this shift as a sign of stabilization, not weakness, because it limits the chance of violent shakeouts. United States spot Bitcoin exchange-traded funds recorded outflows of $3.5 billion, while Ethereum-based products saw $1.4 billion leave the market. Even so, Coinbase believes the leverage ratio has normalized. System-wide leverage now sits around 4 to 5% of total market capitalization. During summer, it reached nearly 10%. A lower ratio means less fragility as the year closes. Another signal comes from the loss-to-profit ratio, highlighted by a crypto quant analyst known as DarkFost. The 7-day moving average fell to 0.7. That value is well below 1 and marks a period when realized losses exceed realized gains. Historically, this level has aligned with exhaustion of downtrends and investor capitulation. Past corrections showed similar patterns before momentum shifted upward. DarkFost stresses caution. The indicator performs best in bullish conditions, and he views the current phase as a mid-cycle correction. Still, the message is clear. Heavy selling often shapes strong entry zones for long-term participants. A second indicator, the hash ribbons metric, now flashes a buy signal for Bitcoin. The model compares the 30-day and 60-day moving averages of the network hash rate. When the short-term line falls below the long-term line, miners often power down inefficient hardware. That selling pressure can weigh on price in the short term, yet history shows that these periods of miner stress have usually created valuable long-term opportunities, except during the mining ban in China in 2021. Forced miner selling often forms local bottoms. When the weakest operators exit, hash rate recovers, and long-term accumulation resumes. This dynamic supports the Coinbase view that the market is resetting rather than collapsing. If these signals hold, Bitcoin could enter December with reduced leverage, washed-out sentiment, and room for recovery. But no indicator is perfect, and patience may be essential as conditions develop.